Good morning, traders. It's 8 a.m. Chicago time on Wednesday, the 6th of March, 2024. This is episode number 2632. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's jump right into it. This morning, again, I'm still traveling. I'm in Medellin, Colombia. So no camera. And hopefully the internet will hold up here. All right, so the market currently mild risk on, mild risk on. We're up 31 points on settlement in the S&P, 166 points, almost 1% on the Nasdaq, and the Russell's up 18 points as you see in front of you. What's driving this? We saw a pretty good bounce yesterday afternoon. We'll go over some of the technicals there. Yesterday was also Super Tuesday. Not that that's the reason, but the general themes and what's got the attention and coverage is Super Tuesday yesterday. It looks like the election for this year, the U.S. election, will be between former President Trump and current President Biden. We do have U.S. State of the Union tomorrow at 7 Eastern. We'll see what other initiatives and so on the current president, is going to push into the election. JD.com beat pretty well on 43.1 billion, announces buyback. A buyback of $3 billion. U.S. regulators are expected to lower Basel III capital burden. This is very positive for the bank sector. Seeing some of that in Russell. Russell is very financial heavy. U.S. ADP report comes out at 140,000 jobs versus 150 expected. Fed's chair speaking today at 10 o'clock. But just be aware that some of his text comments are out. Some of it says that the Fed do not expect it will be appropriate to reduce policy rate until they have greater confidence in inflation moving sustainably towards 2%. So that CPI number is going to be so important. Anything leading towards predicting that CPI number is what's important. Likely to be appropriate to begin dialing back policy restraint at some point this year. So he's signaling that, yes, the market has been overzealous with the rate cuts, but there are likely to be rate cuts this year. He's also specifically stated that the policy rate is likely at its peak for the cycle. So the market obviously is going to respond to that, or is already pricing that in actually. So that's where that stands this morning. Looking at the calendar, we've got Bank of Canada 15 minutes after the open. You know they're expecting it to hold at 5%. We're looking for the IV PMI at 10. We're looking for Fed's chair to testify to the U.S. Senate today, the Senate Banking Committee today at 10. And then the important one today is the JOLTS job openings and what's important inside of that report, the key element inside of that report. One of the numbers to be released is the job quits rate. The last is 2.2%. The prior one is 2.2%. We would want to see, the market would want to see that falling. Fewer people quitting their jobs. A higher job quit rate implies still a strong labor market. People don't quit their jobs if there are no jobs out there, if they don't think they're going to get paid more. So it takes pressure off of wages, which is pretty strong component of cost. At 10:30 we have the EIA crude oil and gasoline changes, and then we have Fed's daily at 12, Fed's Kashkari at 3:15 Eastern, and then this evening we have balanced trade out of Australia and China. The S&P, really strong volume today, 231,000. well above the mode of 170,000 is outlined here. The inventory is 57% long, and the range is above one standard deviation for the overnight session. So we have really good range. Point of control remaining below the 5100, but the market's trading at 5116. Note again, crypto is not giving up its gains, with ETH finally catching up to the speed at which Bitcoin has been rising. Okay, so that's that for the pre-market summary sheet. I talked yesterday. I don't want to bring it up because it's just taking too much time. I talked yesterday about the very likelihood that the market has topped out for now. We could see on the profile very clearly that the action on Monday indicates that despite the fact that the open was 2 ticks above the low, in other words, there was only 2 ticks of a price discovery push down from the open before the market pushed up, and it ended up taking out the rally day high. This is we expect after a rally day with the market closing at the top and the point of control being the top, we expect this to be a weakish high. We expect the next day, or at least a very close ensuing session, to follow on by checking and taking out that 51.49 and a quarter high. So that was expected. And then what it did is it pushed to 51.57.75. So it pushed through the century figure and it ended up coming down, creating this balance up here between these 2 days. And this was relatively weak. What this looks like is a probe above the 51.50 and failure to hold on to these prices. I want you to imagine that it's a bit of the price discovery process is like a battlefield. And if you're battling because you're trying to take a fort or a castle, as you make a push and you overwhelm the defense and you push in a direction, and the defense can be buyers or sellers. It's interchangeable in the markets. It's very fluid. It's very efficient. Imagine that they're pushing the defense, and now the battle line has moved to new territory. So now we're getting closer to our objective, right? So the battle line moves. If the offensive force is strong, what it'll do is it'll hold on to that new territory and it'll balance. And by balancing, what it's doing is it's digging trenches, it's putting up barricades, installing spikes, that sort of thing, as it defends that territory and it holds on to it and refutes small attacks here and there and everywhere. So this is just an analogy. When the battle is such that they go up a hill and then they come running back, the offense becomes defense. This is the standard kind of mode of how the market turns around. It turns around in kind of a rounded, you could see the point of control, overlap, then it's all of a sudden rolling over, and then we expect a day or two at least, even in a bull market, we expect a day or two of lower points of control. What you saw back here at the end of February is the point of control shifted down, then you have this overlapping value forming a base, and then the market checking that value and failing to hold on, and then finishing higher. This is why there's a lot of confidence in this rally coming on Friday before the market opened. Like, I have no interest in selling when I see this kind of thing where the market rolls over, puts in balance, checks the balance with an excess, and then ends up pushing the other side. You don't want to be short in that environment, okay? And then yesterday what we did is Friday we got the rally, pretty strong finish, pretty good progress. Then Monday it comes in, pushes through, then it gives up that territory, gives up the territory above 5150, balances here, and then the overnight session makes it so that we move down. So if you recall from yesterday's video, I said it's all about selling today, all about selling. If you recall, I drew these things to basically say, I don't know where it's going to turn from where it opens, but I'm going to be looking for standard setups to the sell side only. Can I predict that it'll sell? No. But I'm going to favor, as a trader who doesn't know what's going to happen, and the fact that the market has random outcomes on every single trade. Remember, each one of us as a trader thinks, until you've done this a long time and you've got thousands of trades under your belt, you're thinking about the next trade. That's your live or die by the next trade. But as you move on and you progress in your development, what you'll find is, who cares about the next trade? I care about who cares about the last trade? The last trade is just a trade. It didn't work. It may have had some areas of improvement. I need to mark those on my calendar or in my journal. But my focus has to be the next trade, because that's the only place where I can make an impact. And that next trade has to have has to be taken on the best probabilities possible. Okay, and yesterday the best probabilities possible were to the short side. So my job yesterday is to wait and see if it fills the gap. Remember, I said, we're going to see if it fills the gap. As long as it does not fill the gap, we're looking for it to roll over. We're looking for it to roll over, and at that point, we're looking for setups to the short side. So do I have a setup to the short side here? I do not. Do I have a setup to the short side here? I do not. Do I have a setup to the short side here? Yes, I do. I've got a collision pullback continuation trade coming into the initial balance being built, and I'm looking for it to extend lower. It's through the 5100. It's through the 5100. I'm leaning against the 5100 on collisions. That could be an area that it's not great, but it could be an area that I could participate, and so on and so forth. If I see a setup for a long here, a spike failed retest, then I'm passing. Unless I'm scalping long, I'm passing on that trade, just looking for shorts. Just doing that as a trader will, in my opinion, take you a long way towards just making this more sustainable. So yesterday, it opened, tested higher, came back down, left some single prints here, and then from there, what it did is it created two very distinct distributions. One right at the 5092. Remember these two lines from last week Monday? Yeah, last week Monday, these two lines here. This is our balance zone from back here, from this box. Okay, so the first area where we saw a battle is 5092. The next area we expect a battle if it falls through is, once again, 5067. 5067. How many of you remember 5067 from last week? So if we go back to the active chart, you can see that it pushed down into that 5092. Then all of a sudden you get a collision at 5100, right at the 5100 right here. Then you get another big collision, and really a big fight. Lots and lots and lots of collisions here. Lots of collisions. Right at the IB low at 50 in the 5092 area, which is right here. 5092 tried to defend, and it finally gave in, and then we ended up pushing lower to where? To basically down to 5067 and overshooting it. And as I zoom in to this 5067, you can see there's quite a bit of a battle going on here. Okay, big fight. Where you see big red dots, those are large lots trading, single order, large lots trading on the bid. And if the bid doesn't fall, it means that there's somebody supporting it there. There's somebody absorbing those those prices. And what we see here is absorption going on. Delta moving down, and then all of a sudden it's hitting and it's hitting and it's not getting anywhere. And then the market starts to push back up. And so we end up pushing back up. And from there, all we've done is push higher. And that's why most of the volume today is above settlement. So the market has successfully found buyers down in our 5067 zone. Where does a 5067 come from last week? It is that excess low. So this is the gap and go. This is the gap and go low on NVIDIA, NVDA, right? And has been our key support in this area, tested multiple times, right? Market tries to come to it and just jumps right off. The thing to note about yesterday, despite the fact that we are trading right here near yesterday's highs, we left a double TPO low, so we need to mark that as a weakish. The next time we move down here, we're likely to go for the 50-52 low and the gap zone. But we'll leave that for another day. It looks like today we're looking to rally. What are we expecting for today? Today, the imbalance condition in the market right now is it's trying to establish one-time framing down, but it's not likely to do so. The market's in a from day to day, the market imbalance is neutral currently, but the imbalance for today's session is to the buy side. The point of control is down here at 5090. The VWAP mid for the session are at 5100. The market is squeezing the high. This is very likely to continue to push and break this high, and likely to blow out quite a few shorts from yesterday. Remember, this is all aggressor selling here. This is likely to blow out a few shorts and then start to move to 5135.50 for a quick test, and then ultimately push back into the point of control of this day that we left behind up here, which is exactly at 5138, 5139. That's the target to the upside. So short term, we expect this high to be gone, and we expect that it's likely to push to at least 5139 today to basically fill in the gap zone from left behind from yesterday. Okay, what would interest me on in the short side? For me to be interested in the short side, it's got to get below settlement. It's got to get below this divot right here. It has to get below settlement, below 5092, and then have weak pullbacks to the buy side for me to get short, targeting 5067. Now, if we do that, this could be a big trade. Okay, so the most likely scenario is up, but if it can get down here and retest the 5067, take out that double TPO low, you could have a pretty big runner. So if we happen to get this is one of those trade of the month type of things, like the one big trade, because what that does is it opens up this entire excess low, and it opens up the gap beneath it. We have, let's reset that. We have a big gap. See that? It opens up the gap beneath it. Okay, so you'd want to hang on to this. I mean, it's a 60 point runner type of thing. Not likely, but if the market gets bad news, or if something causes the market to turn over, then that's the likely path. I know I usually cover crude and NQ, but I'm trying to keep these short. It's 8:20 Chicago time already. Good luck today. Don't forget to hit the like button on the way out. And of course, if you're not a subscriber to the channel, click on subscribe so that the channel can be noticed by other traders. You can help them out. Good luck, and happy to hear your comments. Take care.